I'll take the under on the Nasdaq. I say short Nasdaq, long gold. I'm agreeing with you. Bitcoin next 6 months, I still think it's headed lower first, so I'll take short on the Bitcoin.
All right, and anything else, Silvers? I mean, you don't have to stick to the same. I'm just trying to get a mood. This is like checking the pulse.
Yeah, so with silver, for me, it's a trickier trade. Gold's the pure play. Silver has industrial side to it, so if we do hit a recession, it's going to be a little trickier. Longer term, I think silver still goes up. It's just a trickier play in the near term. I would say short Apple, short Nvidia. I think, again, you're looking at a recession second half, and some of these valuations on some of these NASDAQ stocks have gotten ridiculous again. I would say short Pepe. I would say these crazy crap coins that are going right now is a huge concern for me. It's not a signal of a bottom, it's a signal of a top. So just people out there, be careful out there. There's a lot of crazy pump and dumps going on.
Bitcoin is up 0.7% to $29,404, while Ether is down 0.5% to $1,892. Hello and welcome to Crypto Street. In today's video, Gareth Soloway updates us about Bitcoin's current market standing and his outlook for Bitcoin in 2023.
When you have a baseline, right? If you just keep recession, so the booms are just a little up, then the recessions are a little down. It's when you stimulate, you create the huge bubble, which in response then has to have the big downside as well. It's just the nature of life, right? I mean, if you're going to do a lot of drugs, you're going to have a big crash on the other side. I mean, it's the same kind of principle there. So definitely 100%. I do see a recession coming in the second half of this year. I'm looking at it in terms of the jobs data. We're starting to see that crack in the last report. I think we get another one next Friday. We've seen the inflation numbers come down, but not enough to enable the Fed to step in, and that's the key, right? So getting inflation from 9% down to 5%, easy, right? I mean, that's just supply chain starts to work again, all that stuff. It's that last 5 to 2 that's going to be the trickiest thing. And I think that's where people in the market, for me, I look at the stock market, I'm slowly moving in more and more into the short side of the S&P and the NASDAQ. And that's purely from the aspect of investors are in this phase of saying, okay, the Fed will rescue us no matter what, because we've been conditioned just like an animal. The bell rings and you run to get the food. That's the way the market investors are. The Fed, the difference here is that with inflation north of, let's say, 3%, I don't see how they stimulate in the same way, because then they're going to send inflation to 20%. Instead of 9, it's 20, right? And so that's going to be a shock for the investing public when they finally realize the Fed can't bail them out. Now, it's not to say the Fed's not eventually going to come to the rescue. We know the Fed is notorious for moving goalposts. Eventually, 3% inflation will be fine. Eventually, 4%, and it'll just become the norm. So yeah, I think recession second half. I'm not predicting a depression at this point. I think that comes later in the decade with the 100-year cycle, just like COVID and the Spanish flu. But I think this is the beginning of that table setting for it. It's important to recognize the Fed is supposed to be independent, but reality, they're affected. They're humans, right? They're going to be affected by political pressure. They're going to be affected by seeing people suffering, right? It's just human nature. Like when you have that ability, and unfortunately this is the issue, and they need to be stronger and not do this. But when you have the ability to help people in the short term, it's hard to say, no, I can't do it. I have to watch you starve on the street instead of printing a lot of money so you can have money. But ultimately, that's going to be the downfall, is that you really need a body that doesn't care about that stuff, that has no influence, being influenced by other factors.
Bitcoin has remained below $30,000, which is a key resistance level, but has not had to test any major supports just yet. Joe DiPasquale, CEO of BitBull Capital, told CoinDesk in a note, "For now, the market is expecting a 25 basis point rate hike in the Federal Open Market Committee meeting this week, but we are likely to see price swings following the Fed's post-release commentary." Traders on the prediction market Polymarket are putting the likelihood of a 25 basis point BPS rate hike at 97%. While the CME's FedWatch tool is putting that chance at around 82%. The attempts to breach $30,000 this week have failed to make a higher high, which should be concerning for the bulls, DiPasquale also wrote. In general, we would not be surprised to see the market leader testing $25,000 in the coming days, particularly after the FOMC.
Yes, I mean, number one, the de-dollarization is definitely happening. I think there's a lot of fear that's spread around because of it. In reality, am I making a trade today on the collapse of the dollar? No, right? Am I tucking some gold away? Yes, gold, silver, metals, Bitcoin eventually, absolutely. But it's not something that like is going to happen overnight. You're not going to wake up tomorrow to a dollar being worthless. We're not Weimar Republic, right? So I think that that's something that people have to hear because I've seen so much on social media panicking about this. I had a friend that I hadn't heard from in years message me, "Hey, do I need to exit all my dollars?" And it's like, not quite yet. I mean, it's one of those things you need to understand is coming, but it's not like a do or die scenario right now. Now, having said that, there's no doubt that China wants to be the reserve currency of the world. They're trying to destabilize this by working with countries all across the world to start trading in digital yuan. We know Saudi Arabia is doing trading in oil and so forth in other currencies as well. So it's coming. It is in process. It's just not going to happen overnight. And the way you know that, by the way, is when you see fear hit this market, the stock market, where does the money go? It still goes back into the US dollar, right? So as of now, that's the case. But again, every investor out there needs to be aware that this is happening. The dollar will slowly become the non-reserve currency of the world, and you will see the dollar lose power due to that. And by that meaning, the U.S. will lose power as well. We know that the U.S. uses that as a reserve currency to maintain order that they see fit and control, and that will slowly slip away. China wants that control.
Harry, before we get to you, why did we get here, Gareth? Is this because the US abused their power, because they used the dollar as a weapon? Because is that the reason why?
Yeah, that's part of the reason. I mean, part of it is financial, craziness of printing money. I mean, again, if you look historically at the reserve currencies over the last 500 years or longer, there's a time life, right? There's a lifetime of a reserve currency, and we're kind of right at the end of that for the US dollar. So number one, that's just the nature of it. And by the way, it's not that there's a time frame on it. It's just that countries do not have the discipline to not print their own currencies. When you have the crazies running the crazy house, they're going to do whatever they need to do to maintain power, which is printing money and so forth. So it's just the nature of human nature, frankly. Yeah, I agree. I think it's definitely a Cold War with China. China is slowly trying to take the U.S. down, and it's kind of Belt and Road development, kind of becoming the biggest player. China wants to be that major influence all over the world, the one that's in control like the U.S. has been for so long. So I absolutely agree. I think this is just part of the plan for them. And do I think that they really care that much about Russia in terms of maybe supporting them? No, I don't think so. I think it's more in their bigger scheme of plan of what they're trying to achieve by destabilizing the U.S. and ultimately destabilizing the U.S. dollar. So it's all this kind of complex thing. I agree that ultimately you could be starting that hot war like we know is going on with Russia and Ukraine. And you have all these countries that they're into that war with just little bits, right? It's just a little bit of here, a little bit there, but it ultimately creates the potential for a world war type of situation.
So what are your thoughts about Gareth Soloway's prediction? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.